Hello all, and welcome to another session of Payoneer Pathshala. My name is Vikram Priyadarshi, and I'm the marketing manager for Payoneer in India. Payoneer Pathshala is our effort to help a different set of SMBs in managing their cross-border business. In today's session, we'll be talking about a very important topic that many of our customers have come and spoken to us about, and this is how to go about in setting up of US entities. In many of the cases, we have seen customers in US wondering as to at what point in their business journey is there a requirement to set up a US entity, and if they have to do that, at what point and what are the procedures of setting up these set of entities for their companies. I'm very pleased to have Mr. Mukund Srinivasan. Mr. Mukund Srinivasan is the CEO for NYBax. Before I go forward, I would just give his profile introduction, and he'll be helping us and guiding us in today's session. Mr. Mukund Srinivas is the CEO of New York Business Advisory and Corporate Services. He is a global market entry solutions expert with background in invoicing financing, US business setup, and global business registrations. And he has a vast experience in trade along with government and semi-government licensing. So thank you, Mr. Mukund, for coming and sharing your time with us. So before we move forward and I share the stage with Mr. Mukund, let me just elaborate as to what we'll be covering in today's session. And these are some set of pertinent questions that have come with different customer interaction that we have made in last few days. So as I said, the first question would be about at what point of time would your business should consider opening a US entity if you have clients and if you have business in US? What would be the advantages and even granularities while setting up of US entity? Where should you structure? The federal laws in US is very strong, and different states have different taxation rules. What are the kind of things that you should cover in terms of setting up this US entity? Should it be based on your client location? Should it be based on the taxations available? Should it be based on how easy it is to set up the entity in US? Following it up with requirements and compliances that will go all along the process. Mr. Mukund's team also helps people in kind of registering their US entity. So he'll also take us through the process and timelines and other aspects like annual compliance and maintenance. Before I hand it over to Mr. Mukund, I would also request all to share your questions in the Q&A section. We'll be taking different questions as it comes along while Mr. Mukund would be present. So Mr. Mukund, before I hand it over to you, my first question, and I think one of the most important questions that we have seen is the difference between a branch office and incorporating the setup in US. So we'll possibly start from there. Over to you, Mr. Mukund.
So here are the major differences. What happens when you have an incorporated entity and a branch office? The speed of starting your operations is better in a branch office. Whereas if you want to incorporate an entity, it takes a number of days, a few number of business days to start. In the branch office, it is zero. You can start from day one. And the oversight. So when you have an incorporated entity, the oversight is always local, meaning the people who heads the company in America would be managing the affairs. Whereas if it's a branch office, it can have a greater centralized headquartered control. So coming to the cost wise, it's always cheaper to have a branch office than an unincorporated entity. The most important part, why we should have an incorporated entity, is the next one, the liability protection. Any liability of a branch office flows to the foreign parent also. Whereas if you have a incorporated entity, it probably ends there in America. So it doesn't flow into the foreign parent. And when it comes to client acceptance and customer service acceptance, we have always seen that incorporated companies have a higher degree of sense of satisfaction for clients acceptance. And whereas for a branch office, it would be very low. They don't trust a branch office to handle the customer service and other parts of the business as efficiently as a incorporated entity. The next one would be the tax limitations. So basically what happens here is, in an incorporated entity, the tax limitations are very clear, as stated by the government, and not just to some interpretation by a officer. Whereas in a branch office, it could be very confusing, because every officer might have a different opinion on where the taxes should be there, whether the parent company should be paying the taxes on its income in America. So it's a lot of confusion and left open to interpretation by the IRS. So lastly, the capital access. So if you want to access capital, incorporated entity is the go-to for the entity, is the go-to choice for you. Whereas a branch office, you will not be able to raise any capital at all.
Mukund, before you move on, there are some pertinent questions to this slide, which possibly I can take it right now if you're okay with this.
Surely, please go ahead.
Yeah. So Satish basically asks, can an Indian company, which is a private limited company, set up a US entity under C Corp as a wholly owned subsidiary in the US?
It can open. Yeah, there are no restrictions.
Okay. The other question is, are there any preferential sectors for opening an entity in US?
No, there are no preferential sectors. But there are certain restrictions though. Yeah.
Okay. So another question that Raj mentions is, you mentioned oversight as a term. Could you explain that a bit more for this?
Yeah, definitely. So what happens is, when we say oversight, it's basically how the company is managed. In an incorporated entity, there will be a CEO, there will be a vice presidents who will be in charge of different verticals, different domains. They will be in charge of the entire operation. Whereas a branch office generally will have a manager who reports to the headquarters, and he will just perform the duty as instructed by the headquarters. There is no independent decision making in the branch office. That is the concept of oversight. Yeah.
Okay, and possibly the last question that I'll take for now, before you move further, is the question that Mr. Patel is asking is, can I transfer the money from US incorporated entity to Indian incorporated entity owned both by him?
Yes, you can do it. There are no restrictions. I mean, there are restrictions in India, RBI, beyond $10 million, you have to report and get approval. Up to $1 million, there is, up to $250,000, there is no restrictions.
And this is the annual number that you're talking.
Yes, annual number. I think in India it is financial year, whereas in US we calculate it as calendar year. Yeah.
Sure. I'll wait for you to move forward, and then we can have the questions coming.
Sure. Vikram, if I'm going too fast, please let me know. Yeah,
no, I think it's okay.
Yeah. So the next one would be how and where to structure your US entity. Okay, first one we'll deal with is, what is the difference between an LLC and an INC? LLC basically stands for Limited Liability Corporation, whereas an INC stands for incorporation. Okay. So what are the differences? What is an LLC? What is an INC? So let me explain to you. An LLC is formed by a group of members, similar to a partnership company in India. Okay. And all of these members will have their interests. There is no shareholding, and everybody will be participating in the operations of the LLC. Okay. Whereas an INC is ruled by the number of shares and is ruled by a shareholder agreement. For example, a person can just be a shareholder of the company without being a vice president or a director or a president of the company. So he doesn't have to participate in day-to-day management of the company. Whereas an LLC basically means that you are a member of the company and you are participating in the day-to-day affairs of the company. And coming to the differences between, what are the differences between an LLC and an INC? The first and foremost is corporate tax. LLCs are considered as a pass-through entity. meaning any tax or any profits that comes to the LLC will be taxed at the individual level of the members, not at the LLC level. Whereas in an INC, it's always at the corporate level, meaning the company INC, the incorporated company, pays the taxes and then has the net profit and shares the dividend with the shareholders. Now here again comes, what is a pass-through entity? Okay, the pass-through status means any profit that is there in the LLC has to be distributed among the members immediately. Okay, so that it is coming to your current financial year itself. You are not able to retain the profit in the LLC. It immediately passes through to your individual level. Whereas in INC, there is no pass-through status, so you can retain the profit and just pay the corporate tax, and you don't have to pay the dividend tax there unless you pay out the dividend to the shareholders. Yeah. Now, while we might see that there are no corporate taxes for LLC, which might seem to be advantageous at a certain level, actually it is not. Okay, because every member of an LLC will have to pay his personal income tax, and there's something called a self-contributory tax, self-employment contribution tax. So he has to pay it. How much is the self-employment contributory tax is? I'll tell you. It comes to, for the first $45,000, you have to pay 15.4% totally to the IRS. So that is the self-contribution, self-employment tax that is paid when you are a member of a LLC. This is apart from your personal income tax that you pay to the IRS. Whereas in an INC, it's a very clear proposition. You pay 21% flat on the net profit, and if there is a dividend payout, you pay 16% on the dividend. So this is how it works. So in the INC. Now coming to certain geographies like India, I mean some of the countries where there may be single ownership is not allowed. But whereas in US, either LLC or an INC, there can be a single ownership, which is a great advantage for startups. And investor preference. So coming to the investor preference, I would like you to understand that to participate in an LLC, the investor has to become a member of the LLC. So which may not be his choice, because he has to participate. There is a membership interest created only if he becomes a member. So that is the main disadvantage with an LLC. Whereas in an INC, what can be done is the investor can buy just the shares of the company and remain outside of the board. He doesn't have to participate in the day-to-day affairs of the company. And as to the structuring of the responsibilities in an LLC, every member will have a task. He will be a treasurer, he will be a secretary, he will be a president. There will be a task assigned to each of the member, and it is all distributed among the members. Whereas an INC is ruled by basically shareholders who appoint a board of directors. The board of directors appoint a CEO or a president, and a president appoints his vice president. So it's a hierarchical structure, which is very clearly defined. So this would be the main differences between an LLC and INC. Vikram, I'm pretty sure that there will be a lot of questions on this one.
Yes, you are right, Mukund. There are a lot of questions coming in. Possibly I'll take some of them before we move forward. The first question is, and it's been asked by Mr. Ashish, does incorporated entity have to have a local employment? Is it mandatory for the INCs to have the local employment, or can it operate with no actual employment on payroll?
No, there is no requirement of a local employment. It can be remotely operated and offshore operated. There is no
even the INC
of
entity, is it?
Yes, both of them, both INC and LLC. Yeah.
Okay. The second common, and I think these are about 3 to 4 common questions that I'm clubbing in. And it's been asked by Mr. Shubham, Vinod, and Suraj. And the question is, can an Indian established branch office directly open a US branch office without any establishment record in India?
As regard to the Indian laws, I would not be
Yes.
so much proficient. Yeah.
Okay.
In US, you can open an office. You don't have to do anything. You can open an office. You can send money. You probably will be not be able to open a bank account unless you have a local resident who is part of the employment, who's part of the team there. Yes, you can do that. As regards to the Indian, whether the Indian government will know or not know, I'm not sure about that part, how it is taken care of in India.
Sure. I think you have covered this part, but if you could reiterate this for Tarun, and the question is that LLC versus INC, which would be better for which kind of business and at what stage?
I think for a simple thing, it would depend on individual situations actually. Okay, there are. I have a broad framework on how I'll see it. If you are looking to raise money, you have to go to INC. If you are self-sufficient in funding, you don't want to expand your membership and you don't need any more investment, go for an LLC. Yeah.
Okay.
One more thing I would like to add. One more thing. So it also comes to the point wherein if you want to retain money in the American system and within the INC, it is possible only in INC. Okay. You can't retain the profits in an LLC. So it will automatically flow through to you. Yeah.
Sure. There are some questions on double taxation, but I'll take this possibly after you cover the slides on taxation.
Yeah, sure.
And just one other question that possibly I as of now. Yes. So the question is, have you seen a need where an Indian company wants to open US entity to send Indian employees on H-1B?
Of course, it is required. Yeah, it is required. Yeah. So if you want, if you want to operate your own entire life cycle of H-1B, of course, you will need a US entity.
Sure. I'll let you move forward on this. There are other set of questions, but I understand that there are some parts of it that you will cover going forward. So I'll wait for those, you to cover those slides before I take those questions. Go on.
Surely. So coming to the next point would be how and where to structure your US entity. Unlike in India, where the company registration is done at a very federal level, at a central level, in US, you can incorporate your company in any of the 50 states. So while it is advantageous at some reasons, it is disadvantageous also. But one thing that we need to keep in mind is you can open and incorporate a company in any state and operate it in any state. Okay, there are no restrictions. For example, if you open a company in California, if you register a company in California, you can operate the same company any state, any part of the country in US. There is no restrictions on that. That's the thing about the 50 states rule. So there is no state will restrict you from opening a office there. Now, what are the factors that could influence your entity formation location? For example, which state you have to choose? See, these are very broad parameters for this. It all depends on individual situations, I would like to say. The first one would be state compliance. Naturally, everybody would want to be have less headaches with the compliances. Some states like Texas doesn't even have to have an annual report filing. I would say that is a very good thing. But at the same time, every advantage has a disadvantage. So state compliances are the things that you need to look in for firstly. The second one would be state taxes. So there are multitude of taxes at the state level that happens. One is a state sales tax, franchisee tax, gross receipt tax, corporate tax, and individual income tax. Not all states will have all the 5 taxes. Some might just have a sales tax. For example, Florida has a state tax and a corporate tax. There is no franchisee tax. There is no gross receipt tax. There is no individual income tax. So this varies from state to state. So your situation would actually determine what is the best state for you. And the nature of business. This plays a very crucial role. For example, if you're a tech company, I would suggest that you should go for California. You are a media company, I would say you should go for a New York. And if you are a staffing company, I would say you should go for New Jersey. And if you are a entertainment company, so I would say go to Florida. Or a training company, go to Florida. So these are a broad set of parameters that have been committed. It's not a fixed rule, but generally companies that are in IT, they go to California. It says just a following the herd. Yeah, there is no fixed rules on that, but generally that is what we also recommend. Now, the next point is easy to access services of the state and the service weakness. For example, some states in America can register your company as less as 5 to 10 minutes. They'll register it off. Whereas some states like Delaware, they can take up to 7 to 8 business days also, depending on their volume of business. So this is one area that you need to keep an eye on it. I'll explain to you in just one sentence why it is very important. For example, you already file a incorporate a company with a set number of shareholders. If you want to add more shareholders or add a director in the company, then if you fail in a state like Delaware, it will take as much as maybe 15 to 20 days. Okay. Previously, Florida used to take 45 to 80 days to
Mukund, I lost you.
the healthcare sector, they would want you to be located in the same state where they are located, because the healthcare rules change from state to state. So it would also become a important parameter for your locating your entity. And of course, if you are in US, if your physical location is in US, of course you would want to be deciding on where to have your office, because closer to your house is what you would always prefer. So that is also a factor in case you are going to be in US. Vikram?
Yes, I'll take some other questions, Mukund, before you move forward. So one question is, can an LLP be converted to an INC?
No, it can't be converted. In America, the concept of conversion is not there, because the basic structure of the foundation of the LLC and an INC is very different. So it can't be converted.
Okay. I know that you are coming on to the differences in states while setting up a US entity, but I think this question is still relevant. And the question is it possible that we register the entity in one state and hire and operate people from a different state? What would be the implications in such case, considering different taxation laws appear in different states?
Okay, this is a good question actually. Okay, so here is what is going to happen. You are perfectly legal to incorporate a company in one state and have an operational office in another state. There are no restrictions on that. Yes, taxation wise, you are always going to be billing from your registered state. Okay, you are not going to be billing from your operational state. Okay, so that is the major thing you have to understand. And for example, the employees, where their current location of employment, the employment rules of that state applies, not the state of incorporation.
Sure. And one more question I'll take before you move forward. The question would be, how does the taxation works? I mean, how can somebody avoid double taxation if I earn in US account and withdraw that to an Indian bank account?
Okay,
how can somebody avoid double taxation in this particular case?
Yeah, see, except for dividend income, most of the taxes that you pay in America can be deducted, can be set off against tax in India, because India and America are signatories of a double taxation avoidance agreement. So we have a treaty between India and US. So any tax that you pay, either for your corporate tax or your income tax, it can be set off against taxes in India for the same amount. So there will be no double taxation. For example, you get a salary of $100,000 in US and you pay the taxes there and you get the money to India. then you have to show to the Indian IRS, sorry, Indian income tax that you have already paid the tax. There it is set off against the, you don't have to pay the tax again for that particular income.
Sure. I think one common question that's also coming in is how would somebody open a bank account in US? And I think the answer would lie with Payoneer, wherein when you sign up to Payoneer, you would have access to local receiving accounts, by which I mean that you would have access to multiple countries, 10 plus countries in which you can receive the local bank account for you to collect the payments there. So that's one question that even I would be able to help you on. And one more question, Mukund, before we move forward with your slides. Can a non-resident open an LLC if you aren't aware of any person whom you can pay the taxes through? So how would you pay the taxes in case you are opening an LLC when you are not a non-resident? You are not a resident for the country.
Yeah, you can certainly open a company without being a resident of America, either an LLC or an INC. As regards to the tax part, yes, of course, you need professionals to help you with this. Generally, there are many companies that does the service, and we also take care of that service.
Sure, Mukund. So go on, Mukund. I'll keep on taking the questions.
Sure.
Yeah.
So here I wanted to bring to you what are the main subject of ease of incorporation and maintenance comparison, particularly with regards to Delaware and other states, because all of us would have heard a Delaware company. What is it? Why is it everybody goes to Delaware? Why should we do it in Delaware? There are certain things that are very common in all of the states. Okay, but people always prefer Delaware. This slide will answer you that question. So basically, what is it in Delaware that is not there in others? Okay, is there a business and personal tax? Yes, there is a personal and business tax in Delaware. So does in all of the other states. I mean, some states like Wyoming and Florida don't have income tax, personal income tax. Okay, so there are other states also that have the similar business and personal taxes also. So people still prefer Delaware. Now, Delaware doesn't have a sales tax. So does other states. Some of them have sales tax, some of them don't have sales tax. For example, Oregon doesn't have sales tax, Wyoming doesn't have sales tax. Now, what is the difference between when you have a sales tax? I'll tell you. So, for example, if you are a company incorporated in Delaware and you sell a product in Florida, you are still liable to pay a tax in Florida. So it doesn't save you. What saves really is if you are a company in Delaware and either sell in Delaware, within Delaware, then there is no sales tax. There is no sales tax to be paid. Or for example, if you are a Delaware company and you sell somebody in Wyoming, of course, then again, there is no sales tax. Okay. So this is the part which people don't understand. Delaware has a zero sales tax doesn't mean that you don't have to pay sales tax at all. You have to pay. It is based on where your customer or client is. So the franchisee tax. Okay, the franchisee tax is one of the taxes that is across all the states except very few states. So franchisee tax is basically calculated in various parameters. In some states like Delaware, it is calculated on the number of shares. In California, it is calculated on your revenue. For some states like Florida, it is calculated. There is no annual franchisee tax, but they collect an annual fee. That's about it. So the franchisee tax is one thing that you have to always keep an eye on. Because we have experienced companies where they were incorporated in Delaware, they got franchisee tax demand of nearly $150,000 to $180,000 every year because they had incorrectly put the number of shares in their company. So this is one thing that you have to be extremely careful when you are incorporating in Delaware, particularly. So there's one more requirement for every entity in every state to be active for the next year. You have to file an annual report. This is basically a report informing the state of any changes or no changes in your existing set of members, shareholders, business address. This is an opportunity for you to update it by paying the annual reporting filing fees. So there are some states like Texas. That's the only state where there are no annual filing reporting required. All the other states in America need it. And the service quickness. From our own experience, we have seen that Delaware is the most slowest state in terms of services compared to all the other 49 states. And most of the other states have gone digital. Delaware still has not gone so much. So it is still moving very slowly. So the next one would be investor preference. Every investor would prefer a Delaware company for a simple reason. There is a court called Chancery Court, which has about 200 years experience in settling business matters. Okay, they feel that it is all these business matters are settled very fairly in Delaware, and that's the reason most of the investors, most of the Fortune 500 companies, most of the top companies in NASDAQ, all of them are located in incorporated in Delaware. And Delaware has a very good anonymity. For example, you don't want anybody to know who owns this company. That can be achieved in Delaware. So does other states, but Delaware is very famous for it. For example, if an IRS sends a notice to Delaware state asking who is the owner, they will not reveal the information. It's a very strict anonymity being followed there.
So Mukund, some questions on Delaware specifically, and it seems that a lot of people have questions on setting up of and which state to choose while setting up the US entity. I'll take some of the questions which would cover the common themes across being asked. So the first question is, if I register a company in Delaware and hire consultants in New Jersey or California, how would the tax be managed?
There are multiple taxes that are being in subject here. One is the corporate tax. Okay, the IRS tax, that is federal tax, the state taxes, and the employment taxes. There are 3 points to here. Now, the IRS federal level, we don't have to worry because all the 50 states are calculated as one state for federal, so we don't have to have any issues there. You are a Delaware company, you hire a consultant in New Jersey, okay, and you pay him the salary. Then you have to pay him the taxes, employment taxes as per the rules of New Jersey, where the employee is resident, located at. That is the most important part here.
Sure. So one other note that I would want to highlight to our attendees here. We also have a form at the end of this webinar. So if you would want to reach out to Mukund for any business requirement needs or any issues that you may have from setting up a US entity, you can share in your interest in that form, and possibly Mukund's team would reach out to you. Mukund, my other question is, I have a graphic designer company, and if I want to have a US entity, which type of documentation would I require and how much would it cost?
Okay. See, when you want to incorporate a company, either a LLC or an INC, these are the things that we generally require. We just need a ID proof, any national ID proof in India. And the other one would be, there is a host of information that we require as to what would be your preferred name, which state you want to incorporate, things like that. Generally basic information, what would be your address, residential address, all those information. We need all this information to be done. And once you submit the information along with the ID proof, then your company can be incorporated. Yeah. As to the fees, there are multiple ways how you could do it. There are companies that do it online, and there are companies that does it offline like ours. We don't do online incorporations for a simple reason that every situation will be different, and we can't have a one size that fits all solution to everybody. So that's the reason we do it offline. There are multiple companies. It could start from $500 to $1,500 based on where you go, which state you go.
Sure, Mukund. And possibly the last question that I'll be able to take on state-related incorporation. So the question is with regards to the tech companies. So for a tech company, what are the benefits of setting up a company in California? This question is also coming from the background that a lot of companies recently have kind of are moving out of California in terms of establishment. So
Yeah.
what would you suggest in setting up of an entity in California?
See, I'll tell you, the only advantage of setting up a company in California is in IT would be you are close to your peers. That's it. Apart from it, there is not much fundamental difference on how from where your company is incorporated or located. So I don't see a particular advantage in California. In fact, I see a lot of disadvantages. It has the highest taxation. It has the worst law and order currently, and the only reason that I can see right now is all the tech companies are there in the Silicon Valley, and it's always better if you are there among them. That is the only thing that I can see.
Sure, Mukund, we'll move forward.
Yeah. So now coming to the part wherein we say, what are the requirements? What are the compliances that need to be to incorporate your company? Generally, most of the American states have the same requirements. There are two important requirements. One is a local registered agent and a local business status. These two are the compliance requirements. I'll explain to you what is a local registered agent. A local registered agent is a non-executive person. He doesn't take any decisions on behalf of the company, nor does he operate, nor does he come to the office. He even not do anything. He will just do only, he has only one responsibility. That will be, he's a local resident of the state, and any notices sent by the government or the court will be received by him and passed on to you. So unlike a nominee director, this is not like a nominee director. He's just a registered agent who will receive your mailers from the government and courts and deliver it to you. So we need a local registered agent in whichever state that you are incorporating. And the next one would be a local business address. All of the states would want you to have a local business address in the state that you are incorporated. Apart from this, there are no other compliance requirements for incorporation. And most of the people that come to us will always ask, do we need a minimum capital? Do we have a US citizenship, visa, or a partner, or do we have to physically visit? No, these are all not required at all. The only other post incorporation, once you have incorporated a company, before you start your business, you should always have your employee identification number, also known as the federal tax ID. So generally, for non-Indians, some people take about 45 to 60 days to get the employee identification number or the federal tax ID. But we at NIBAX, we will always get you in just one day. It always has been since our inception. We always get it to you in one day. Vikram?
Yes. Would you want me to take questions, or would you want me to move forward on this?
Yeah. Shall I move forward?
Yeah. Please move forward. I'll take all the remaining questions at the end.
Yeah. So what is the process and what would be the timeline to incorporate your company in US? So generally, what I would suggest is, instead of going to a online incorporation company, you should actually gather your thoughts, have a call with an advisor, discuss your situational information with him, and then decide on the structure and location, because it needs a lot of input from your side. It's something that a person can only decide if he listens to you. A computer can't decide your situations and your information that you give it to them. Yeah. And the second would be, once you are clear on the structure and the entity, there's a certain number of information that we require, that the state will require from you to incorporate your company. You need to submit along with an ID proof of yours. And this particular, whatever the information is filed with the state's Department of State. Every state will have a Department of State within it. So it will be filed there. Once the state Department of State approves your application, your incorporation application, then you will receive a articles or certificate of incorporation from them. Once you receive a certificate of incorporation, then you go back to the IRS. You have to file a SS4 form to receive your employee identification number or the federal tax ID. At this stage, once you receive the federal tax ID, you are good to go to and start your business. Okay. And the next one would be, it's always preferable to have a US incoming phone number. Okay, so that you are more local to your American customers. That plays a very crucial role. Since I worked in US for so many years, I know that we always prefer a vendor who is in America than in India. If they have an entity in US, that would be something like a good option, good alternative. So if you have a phone number also, it's an even more better option, so that we can reach the customers easily. So some of the banks, I know Payoneer does it very smoothly, very seamlessly. They do a wonderful job. But some of the banks can, you have to apply physically, then only you will get a US business bank account. Whereas with Payoneer, I think remote, I mean, Vikram would tell it better. They do it very seamlessly, but they do a very wonderful job. And coming to the timeline, every state has its own timeline. It takes about 1 to 10-15 business days based on how much they are queued up to incorporate your company and receive your tax ID from the IRS. I will move to the next slide.
Yes, please. Good.
Okay, so once your company is incorporated, what are the annual compliances and maintenance that needs to be done? So here are the few things that we need to keep in mind. Once the company is incorporated, you have to file an annual or a biennial. Biennial here means once in 2 years. And some states don't even have that. For example, Texas, once you incorporate, you don't have to file any return with them. Okay, this is not an IRS return. This is not a tax return. This is an annual filing report, so that to keep the company active for the next year. And what are the other compliance is, when you are filing the annual report, based on which state that you have incorporated, you may have to pay franchisee tax or the gross receipt tax. And the third one would be, annually you have to file, generally before April 15th, a tax return with the IRS. And there are some reporting requirements that may not be applicable to about 95% of the companies, but the rest of the 5% we still need to do it. There are requirements with IRS, Securities and Exchange Commission, and the Bureau of Economic Assessment based on various parameters. For example, if you bring in more than $3 million as investment in America within 1 calendar year, then you have to report to Bureau of Economic Assessment and let them know that you have brought in the money. So there are reporting requirements that has to be followed. And of course, the most important thing is, you should never lose sight of having a local business address and a local registered agent. These two are the minimum compliance required for every state. Vikram?
Yes, Mukul.
Yeah.
Okay. So we have somewhere close to about 10 odd minutes, so I'll be able to take about 3 to 4 questions. So the first question is on the inquiry on W9 form. So if you could just share what is the use of W9 form and how would somebody access it? Okay.
See, W9 form is basically it's a form wherein you're asking your buyer not to withhold any taxes. Okay. For example, once you submit a W9 form, you are considered as an independent contractor, and they pay you the full amount. They don't withhold any IRS tax, but they will report that W9 form to the IRS, so saying that they have paid so and so money to you. Yeah. So then it is your responsibility to pay the tax to the IRS. And where do we get the form? This is available very easily on the IRS site, and you could fill it up, or you could have any of a professional also fill it up for you. Yeah. It's a self-declaration form.
Sure. I have Mr. Sandeep asking a bit on, there is something called POEM rule in income tax rules. So if you could elaborate a bit on that.
Yeah. So India has introduced a new concept called POEM. It basically means place of effective management. For example, if you are an INC and you have 2 directors, both the directors are in India, then income tax would want you to declare that income as an Indian income. Okay, so basically it is considering that since you are resident of India, you are supposed to pay the Indian taxes. So that is what the POEM rule states. So now, how can we circumvent this rule? Yes, certainly. You could be a shareholder, but you could have a director from two directors, two vice president and president from America. Then you don't have, the POEM is not effective there.
So Mukul, in case of Sandeep, I think he is a stock photographer, and he sells stock photography on different platforms like Shutterstock. So in his case, would the POEM rule be relevant?
Depends on who is the director in the American company. Yeah. If he is the director in the American company, yes, of course, it would be applicable. And if it's an INC and an LLC, definitely it's applicable.
Sure. And I think another question is also on the specific state in which somebody should set up an entity. So what are the advantages and disadvantages to open a C Corp for a digital marketing and IT development company in Boston?
Boston is a very good city, no doubt about it. Massachusetts, so they're a very good state, no doubt about it. But when it comes to the digital marketing, you said digital marketing, right, Vikram?
Yes.
Yeah. Most of the companies that we have incorporated, they're all based out of New York. I don't know the particular reason, but they're all based out of New York. But you could definitely do it in Boston. Boston is a very good economy. They are very thriving. Yeah. Boston would no doubt be a good choice too, just like New York.
Sure. I'll be able to take two more questions here. Another one is from Shubhan. So he basically runs a SaaS product company. And he's saying which state is perfect for SaaS product companies who are not looking for investor for raising funds. For example, in his case, they make somewhere close to about $100K per year, $100K per year because of the SaaS-based platform. And how would the tax look for an LLC company?
Okay, as I explained to you, LLC company is a pass-through entity. Any profits that an LLC makes is taxed at the hands of the individual. So as to the structuring and as to the location where it could be done, most of the SaaS companies go to California. Okay, but keep in mind the franchisee tax in California is based on your revenue. Okay, so you have to be careful while choosing which is the best state for you. Yeah, and you could even have it in Texas, you could have it in New York, you could have it in Florida. Yeah, see, basically Americans, as long as it's within America, they don't perceive so much of a difference.
Thanks, Mugan. Mugan, one last question, possibly time would only permit me to take one question. And the question is the difference in terms of a service sector company versus a company in which they are selling products. So the question is, for service sector, any different taxes are applicable as compared to companies selling products? For example, companies like IT services sourcing companies or staffing companies who are working for US clients.
The difference would not be much. Whereas for some states like California and for Nevada, they are not having any sales tax on IT services. Okay, some states, Nevada doesn't have IT services, sales tax and IT services, software and things like that. The exact, I understand that you are a SaaS company, so right? That's what, Vikram?
Yes.
Yeah. So basically, every state would have its own rule. But again, here you have to remember this very important question. The sales tax is dependent on your customer location, not your location, basically. So if your customer is in Nevada, you don't pay sales tax on any IT softwares. So but if they're in some other states, New York, of course you have to pay, because this concept of destination tax there in New York.
Sure. So thanks a lot, Mukund, for you.
Yeah, yes, please go ahead.
Yeah,
please go ahead. Yeah.
You answered a lot of questions across various set of fields on setting up US entity. I would request, there were some questions that because of paucity of time, I was not able to take with Mukund. I would request all the interested people who, if you would want to touch base with Mukund and his team, The form after once you will end the webinar, you'll get a form which will ask you for a feedback for this session, and also if you would want Mukund's team to reach out to you in case of for you to set up any US entity. So would request you to fill up that form so that Mukund's team can reach out to you. And again, thanks a lot for a very interesting session, Mukund. Just the number of questions and the range of questions was something that we are very excited about, and it shows that this is one topic that is kind of concerning for a lot of SMBs. And in Payoneer Pathshala, we try to take themes, we try to take questions which kind of concern our B2B customers as well as our seller-based customers as well. So thanks a lot for your time, both attendees and
and thank you so much
hope
for the
you liked
opportunity,
this session.
Vikram. Yeah.
Thank you. I hope you all
Thank you all
liked
for
this session here. So thanks a lot for everybody joining in today. Thank you.
Thank you. Bye-bye. Bye.